In today's show, we're going to look into the crystal ball into the future. Firstly, we're going to have a chat about where property values could be in 25 years' time. Then, with my special guest, Dale Beaumont, we're going to have a look at artificial intelligence and how that may affect our lives, our property markets and our business. So, welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted our leading expert in wealth creation. That's the fifth time he's won a similar award in the last 7 years.
While most homeowners and property investors worry about the value of their homes and properties today, maybe a better question would be, where will property prices be in 25 years from now? Now, the good news is, believe it or not, that the median house price in Sydney has been forecast to be well over $6 million, and the median apartment price in our harbour city could easily be over $3.5 million in 25 years from now. Now, before you say, no, that can't be, housing is already unaffordable, Michael, let's have a chat about what happened over the last 25 years and see what's likely to be moving forward over the next 25 years. And then I'm going to have a talk with Dale Beaumont about artificial intelligence. So whether you're a property investor, a business person, just an ordinary Australian, isn't it going to be interesting to understand how this major trend is going to affect our lives moving forward? So today's an interesting show where we crystal ball things a little bit. But before we get on with the show, I'd like to remind you that in a couple of weeks I'm going to be running my annual Property Renovations and Development Workshop on the 20th and 21st of October in Melbourne. And if you're wanting to step up to the big league, if you're keen to get involved in the business of property renovations and development, then spend 2 intensive days with me at this educational training. It's not a selling workshop. Go to realestateworkshop.com.au and find out all about it, because it's a training event, not a selling event. It's something I've been running since 2003, and it teaches you the business of property renovations and development with a faculty of experts, comes with my personal guarantee, and there's only a few spots left because it's a small group environment on purpose so that there's lots of time to meet the faculty in one-on-one time. And at the end of it, you can have a one-on-one implementation session with me. realestateworkshop.com.au. I look forward to spending 2 days with you in October. And now, let's get on with the show. While many property investors and homeowners are a bit concerned about what's happening to the gyrations of the property market, as I explained in the introduction, if you wait and are patient, in 25 years' time, in 2043, the value of your home, if you live in Sydney, could be well over $6 million. Now, before you say, no, it can't be, let's just go back into having a look at what all this is about. See, according to Aussie Home Loans, who did some research working on CoreLogic data, they found that nationally, the median house values around Australia grew 6.8% every year on average for the last 25 years. In other words, the average home in Australia increased 412% in the last 25 years. Apartments grew at 5.9% per annum. Interestingly, if you go back to the beginning of the research in 1993, the median value of homes across Australia was just $111,524. Interestingly, apartments had a higher median price, slightly higher, at $123,840. Now, it's an old story. Who wouldn't have liked to buy their parents' house at the price their parents paid 25 years ago? So the research showed that over the last 25 years, capital growth for well-located properties was really strong, but it varied, of course, from state to state. So Melbourne had the highest average annual capital growth. Melbourne property values grew on average 8.1% per annum. Sydney is 7.6% per annum, meaning Melbourne and Sydney house values doubled in less than 7 years for the last 25 years. Perth values increased 6.7%. So despite the difficult time Perth's had over the last 4 years. Over the last 25 years, on average, it's performed number 3 around Australia. Hobart at 6.5%. Darwin had an average capital growth of 6.3%. Canberra 6%. Brisbane and Sydney both just under 6%, 5.9%. So those other capital cities took a bit longer than Melbourne and Sydney to double in value. But these sort of figures should give you comfort if you're worried about what's currently happening in the property market, because over the long term, well-located properties keep increasing in value. Over the last 25 years, we've had all sorts of ups and downs. We've had multiple prime ministers. We've had the global financial crisis, the worst economic crisis since the Great Depression. We've had the Asian meltdowns, tech wrecks, all sorts of things. Yet, the value of well-located properties in Australia kept going up. Now, I'm very familiar with this. I bought my first investment property in 1973. I went halves with my parents because I couldn't afford to get a home loan on my own. We got $12 a week rent, and I was excited. $18,000 in 1973, and then Gough Whitlam came into power. The market started to move up considerably. The market went up so much that I was able to borrow against that first home to buy a second investment property in Bond Street, Caulfield. And then when I got married, I needed to sell those properties. By the way, we took a 30-year home loan for the $18,000 between the two of us. Had no idea how we were going to repay it. Anyway, I ended up selling those properties. Made a mistake, of course, selling it. I bought that property in Bond Street, Caulfield. Large Street, Caulfield, back from my parents for $250,000 per annum. I bought it and since put 2 townhouses on it. And now it's worth over $2 million. $18,000, well over $2 million. I still own my first investment property today. Now, interestingly, looking at the Aussie research, a number of other trends came out for over the last 25 years. I guess one of the big ones I'd like to get across to you is that our strong housing markets have boosted household wealth, have made the average Australian wealthier over the last quarter of a century. If you think about it, the value of their home doubled and then doubled again and doubled again. So what's happened is the mortgage that they took out years ago is irrelevant today. That should be giving you a level of comfort. But over the time, of course, the average mortgage size has increased at roughly the same pace as housing values. But with interest rates having dropped much lower, home loan serviceability measures have actually improved. Now, I know some first home buyers are saying, no, it's really difficult now. Yes, it's actually difficult to save a deposit. It does take longer to save that bigger deposit, but serviceability, paying back the loan, is actually easier because of the low interest rates at the moment. But of course, the difficulty in getting that deposit, the big deposit gap, is creating a challenge for a lot of first home buyers who are now seeking help from the bank of mum and dad. Another interesting trend that's occurred, not surprisingly, is that the proportion of first home buyers in the market currently is less. It's now around 17.5% of housing demand. It used to be up to about 22%. Interestingly, while the first home buyers are dropping out, investors have become a larger contributor to our property markets. Look, there was a point of time in Sydney when almost half mortgages were taken out by investors, and that actually wasn't a good sign. I think looking back, an interesting observation is that the urban form of our cities has densified in that last quarter of a century. We're living differently now. If you came from overseas, you wouldn't recognise Melbourne, Sydney, Brisbane, Perth. What's basically happening is we're trading our backyards for balconies and courtyards to live close to where all the action is. So what's ahead? Well, this interesting Aussie report predicted future capital growth by just extrapolating what happened in the past. Now, while past performance isn't always the best predictor of future growth, and housing trends, sure, they're likely to change with a shift to smaller housing, since more of us are now going to be living in medium density accommodation closer to the centre of our CBDs. If property values were to rise in the future at the same rate as they did over the past 25 years, this is what Aussie forecast home values would be by 2043. The median value of homes in Sydney would be $6.4 million, $2.5 million in Perth, $5.8 million in Melbourne, $2.2 million in Hobart, $2.28 million in Darwin. Canberra's always going to do well, $2.9 million. Brisbane, $2.2 million. Adelaide, $1.9 million. In other words, the national average of a home would be about $3 million, and apartments would also shoot up as well. Now, again, these are just extrapolations, But I remember at the turn of the last decade, at 2010, I set out a press release doing much the same thing. I said if Sydney property values increase at the same rate over the next 10 years that they did the last 10 years, Sydney home values would be $1 million by 2020. Well, we got there much quicker, didn't we? Sure, it's hard to believe that Sydney's median house value could be $6.35 million and $5.82 million in Melbourne. And again, as I said, they're simple extrapolations. I can't even say the word. And they don't, in fact, take into account many of the economic, the demographic, the political variables that are going to play out over the next quarter of a century. However, Australia's got a business plan. Its business plan is to keep growing our population. That plus the ongoing wealth of our nation should underpin the growth in values of our property markets. And with Australia's current annual population growth of 1.4%, we're currently adding around 340,000 people to our population each year. Now, while that might not sound like much, we're adding the equivalent of one new Darwin every 20 weeks, or a new Tasmania is stuffed into our capital city somewhere every 18 months. Sydney's obviously growing at a much faster rate than the national averages, and it's going to add almost 2 million people to its population by 2037. That's equivalent of adding a new Perth into Sydney by then. Of course, Melbourne's Australia's fastest growing capital city, growing 18% faster than Sydney. At this rate, Melbourne's going to overtake Sydney as Australia's biggest capital city sometime in the 2030s. So what does this mean for you as a property investor? It should give you a level of comfort, but don't count on the markets carrying you and covering up mistakes, because in the next 25 years, some people are going to become very, very wealthy by owning the right investment properties, and others aren't, because we know just from the past that most property investors don't get the financial independence they deserve because they haven't selected the right properties, haven't got the right finance in place, haven't got the right ownership structures. But that's what we talk about each week in this podcast, so we'll discuss that a lot more in future shows. In the meantime, I just want to give you a level of comfort saying don't worry about the current issues and the short-term soft landing our property markets are having. Go back and look at the long term and then take yourself out fast forward 25 years. I think one thing to think about when you're choosing where you're going to buy an investment property is what's the sort of property that's going to be in continuous long-term demand by a wide range of people. And if you think about it, if money was no object, more and more people are going to want to live in our big capital cities where the high-paying jobs are and close to where all the action and all the amenities are. And they are going to have to, like in Europe and in the other big capital cities around the world, more and more people are going to have to be prepared to rent for those amenities or live in different smaller medium density accommodation. It'll be interesting to look back and see how these predictions worked out. We're coming up for our short break, but hang around because afterwards I'm going to have a chat with Dale Beaumont about artificial intelligence. And boy, is that going to change the way we live, transact, in fact do everything. So I'll see you just on the other side of the break.
If you're unsure what to do next in our changing property markets, why not turn to the proven and trusted team at Metropole Property Strategists to take advantage of their experience of profitably investing through the last 5 property cycles. The team at Metropole have been involved in over $3 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy their buyer's agents will buy your property for you, or you could use their renovations team, property development, or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au.
Artificial intelligence is evolving faster than expected and already surpassing human decision-making in certain instances. So whether you're a property investor, whether you're a business person, or just an ordinary Australian, I think it's going to be important to understand what's ahead. So I think you're going to enjoy my next chat when I have a talk with Dale Beaumont, an expert in technology and artificial intelligence. Now, I've known Dale for about 16 years. I've seen his business success. I've seen how he's used technology in his businesses to help him grow to become an internationally renowned an awarded entrepreneur, international speaker, and best-selling author of 16 books. Boy, Dale, that's a mouthful. Welcome.
Thanks so much, Michael. Looking forward to chatting about this exciting subject.
Well, there's been a lot in the news about it recently, so let's start with basics, Dale. What is artificial intelligence anyway?
So the easiest way to describe artificial intelligence is basically predicting the future by learning from the past. So if you have historical data of any kind, you can now have machines to analyze that historical data and then make predictions about what's the right thing that should happen next. And so, it is an umbrella term, and there's different aspects and modalities within artificial intelligence. There's things like machine learning and neural networks, and also other things like image recognition and speech recognition as well. But basically, it's just computers doing things that would normally be done by humans. Let's put it that way.
So are the robots coming for us, Dale? What are they doing at the moment? What are they doing right now?
So right now, they're already being used in autonomous vehicles or driverless cars, which we can talk more about later in the interview as well. They're already reading our emails and even predicting what replies would be. If you're using Gmail, for example, it's now giving you suggestions as the short reply. So rather than having to type, you can just tap on, different types of answers. And also, Google just a few weeks ago released a video basically saying now that they're having machines make phone calls on behalf of businesses or people to actually book hairdressing appointments. And now the speech is becoming so good you don't even know that it's actually a computer. So now we're basically going to be talking to machines in the same way we talk to humans. And in the very near future, you won't even be able to tell the difference.
So, Dale, it's the extension of Siri and Alexa and Google. It's basically we've already started in some ways with that when it tells me when my next appointment's going to be and how long it's going to take to drive there.
Exactly. So that's one aspect of artificial intelligence that's already now becoming mainstream, and that's using digital assistants. So the ones that you mentioned, like Siri or Cortana, if you're a Microsoft user, or the Google Assistant, they're the most common ones. And now they're being used to basically become almost like a digital employee or a digital personal assistant, someone that's there to save you time and help you to get things done much faster.
So what's artificial intelligence going to be able to do in the future? What can we look forward to?
Well, we can definitely look forward to driverless cars, and so that is very exciting. And say there's different stats out there about how soon this is going to kick in, but most experts say that within the next 5 to 10 years, we won't be driving anymore. Cars will basically be driving themselves. And so later on in the interview, we can talk about how that may affect property in the future, whereby people would choose to live. If you didn't have to drive to work anymore, you could then turn that driving time into actually work time, and so you may choose to live in different locations now, where you don't need to necessarily worry about that being wasted time sitting in traffic. Now it basically can be like a mobile office, so you can be working. Be able
to listen to podcasts like this on the way to work.
Well, they can. They can choose whatever they want to do. They can choose to work. They can choose to educate themselves. They can choose to watch Netflix if they want to in the future. Basically, people are going to have, an hour a day where they can now do whatever they want in this little box, of course, which we call a car, but they're going to be very different in the future, as opposed to just having to drive and be focused on the road. So I suggest that in the future that time will either become entertainment time or it will actually become work time. And I would see even bosses in the future and companies actually giving staff to the option to clock in. So rather than having an 8-hour workday and the 8 hours starts when you physically show up to the office, the 8 hours can actually start the moment that you enter into a vehicle and decide that you're going to start doing conference calls or checking your emails or actually doing meetings, because now you can do it from anywhere you are.
That's a fascinating thought. It's also interesting to see how, as our cities, and particularly the two big ones, Melbourne and City, mature, because how the roads are going to cope. Because it's well known that under the current system, the infrastructure just isn't going to cope, and putting another lane on the freeway, widening it a bit, really isn't going to work enough. Dale, you live in Sydney. You know how difficult the infrastructure is. I live in Melbourne. I know we both live very close to our work, and we've chosen to do that because we don't want to waste time. So that's interesting how it could well change how we live and how we work. What else would artificial intelligence do for me, Dale?
So the ways that artificial intelligence are being used right now, let me give you like a couple of examples. And one of them is learning from historical data to then make better predictions around the future. So let me give you an example. So cruise ships for many years have had the age-old dilemma of how do they know how much alcohol and what types of alcohol to order for on a particular cruise. And why is it sometimes that they run a cruise and they will sell out of a particular beverage within 3 days, and it's a 7-day cruise, and everyone's up in arms because their favorite beer is gone, and then they order more the next time, and now they've got too much. Now they've got leftovers, and there's another beer that is actually sold out. And so what they now do is they now profile what nationality that you are, and they've developed an algorithm to predict learn from the past, learn from 10 years of data to basically say that now we're going to be needing to order for our upcoming kind of cruise season, and knowing the nationalities of the people on board, we can predict now within a 5% accuracy around what alcohol we're going to need to supply those particular guests, because we kind of know what different people, what countries, different people from different countries like, and we now know who's going to be on board. So that example of learning from the past to then make predictions around the future, that can be used in all sorts of different ways. It can even be used in real estate, as well, looking at historical data about what suburbs are actually doing well. So rather than making predictions necessarily based on opinion or demographics, now we can look at data and information and actually trends, and then we can predict in the future what suburbs are going to be more likely to perform better. Now, this is already happening in the stock market, where we have AI or we basically have bots that are now trading the stock market by learning from decades of historical data in the stock market. And I see that same type of predictions for real estate investing in the future will actually have AI systems that will be helping us to make better investment decisions in real estate real soon.
Interesting. So with many of the people listening to this having an interest in property and real estate, are there any other impacts on real estate that you can see happening?
Well, the other one, and this is, again, just something that was released recently, whereby someone said to their Google Assistant, they were about to go into a meeting and they didn't have time, and they realized they needed a haircut. So they said to their Google Assistant, can you please book me a haircut? And so the Google Assistant then rings up a business and actually books the haircut, answers all the questions, finds a suitable time, and makes a booking. So I can already see that, and that's working right now. So in 3 years' time, you could be able to say to your digital assistant, look, I need to actually buy an investment property. Here's my criteria. Can you please come back to me with a short list of 5 possibilities? They might make, this is an AI system that can make 50 to 100 phone calls on your behalf to talk to real estate agents to rule in or rule out certain properties, and then come back to you with a short list of here's 5 suggestions based on the things that you have told me that you wanted. So that could save someone dozens of hours of time. So rather than them having to make all these calls, you could have your digital assistant make those type of calls for you, and even in the future negotiate on your behalf.
Exciting. Do we need to be worried? Do we need to be scared, Dale?
Well, I think with all technology, there is always good and bad with everything. Same with the internet as well. People have used the internet for good, and people have also used the internet for bad. AI is much the same. There is huge benefits of AI. and especially one of the areas we're not focusing on right now, but is medical. And what they are now doing is providing sensors on patients, and they can now predict within 48 hours of when someone will most likely have a heart attack. So think about that. Rather than waiting until a heart attack actually comes on board, they can look at over 100 data points within your system, and they can say you're about to have a heart attack in 48 hours time. You need to see a doctor immediately. And there are people's lives that literally are being saved, even in terms of retina scans and looking at CT scans as well. All of this stuff is being transformed by AI. So it's huge benefit to people living longer, being healthier, less sickness, less cancer, less disease, a whole bunch of different things. However, there can be dangers with regards to an artificial intelligence system, but there are lots of organizations out there. In fact, there's even something called OpenAI, which is a series of big players within the industry that have come together to almost create like a bit of the underlying blueprint, or almost like the rules of the game, almost like a United Nations, if you will, to say how do we use this software and these systems for good. So there are dangers, but there are very, very smart people that are already thinking about how we can develop those frameworks so these systems don't get out of hand.
Well, Dale, I bet we're going to have a few more chats over the years about this as the technology evolves. But in the meantime, if any of our listeners want to find out a bit more about you, because I know you have quite a lot of information available, particularly for people in business, and you've got a fantastic app that I know I resort to a few times as well. Tell us a bit about how we can find out a bit more about you.
Yeah, so the easiest thing would be just to going to my personal website, 'cause that links to everything else. That is just my name, dalebeaumont.com. So DALEBEAUMONT.com. And if you are a business owner, I do run free workshops and events across Australia and New Zealand. There's a fantastic event I run called 52 Ways, and you'll find a link to that on my personal website. Plus, I've also developed a smartphone app that's like having a business advisor in your pocket, and that app is called Bizversity, and you'll also find a link to that through my personal website. Right now it's free, so I'd encourage everyone to go and check it out, as it's a really awesome product.
Well, I definitely commend it as well. And of course, the links to both of those will be in the show notes. So go to michaelyardneypodcast.com, or on iTunes or Stitcher, or wherever you're listening to this. You can go to the show notes and go directly to Dale's site. And Dale, a lot of our listeners are in business or are keen to get involved in business. So can we come back another time and have another chat about the success insights that you've gained from working for well over a decade with so many successful business people?
Absolutely. I would love to chat.
Well, that's almost it for this week's show. A chance to look in the crystal ball, seeing what's going to happen to property values and the way we live in the future. Before I go, I'd like to just read out a great review I got, and thank you so much for all the reviews we get. Every week we get 1 or 2 reviews. I love reading them out in the show. And by the way, when you leave a review on iTunes, Stitcher, or wherever you listen to this show, and if I read it out, I'll give you a copy of any of my books that you like. So this week, the review's from Sanjay. So Sanjay, please send me an email to michael@metropole.com.au with your details and tell me which of my books you'd like and where to post it. But Sanjay left the 5-star review saying insightful and informative. Started listening a few months ago when I began learning about real estate and property market. Michael offers a well-reasoned and insightful comments about the current market trends. He explains things so that beginners understand, but the show is definitely useful for seasoned investors as well. I really enjoy listening to your podcast and continue expanding my knowledge in property landscape. Thanks so much and keep up the great work. Well, thank you so much, Sanjay, for leaving me that review, and please be in contact and I'm happy to gift you a book. Now, if you've enjoyed the show today, if you're listening to my podcast or enjoying my blogs, please help me help others pass the message on. So apart from leaving a review, I love the reviews and it inspires me, and Apple loves them too and gets the word out to more people, or Stitcher, or wherever you listen to this. Why not tell a friend about it, send somebody a tweet, a Facebook post or whatever. Pass the message on, because together, you and I, let's educate more people so they don't make all the property mistakes, so we can actually help them develop the financial independence they require. I look forward to catching up with you again next week when we're going to have another episode of the Michael Yardney podcast.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from today's show, we'd really appreciate it if you would leave a review and we'll read it out on a future show, and Michael will gift you one of his books as a way of saying thank you. Just go to michaelyardneypodcast.com/review and let us know what you think. If you don't already subscribe, head over to iTunes or your favourite Android app. You'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 30 minutes.